Stocks trade firm but ranged as global uncertainties linger. Power, industrials and metals gain while IT and consumer durables trade soft.
Adani Cements has reached an arrangement with truckers in Himachal Pradesh to trim freight costs by 10 to 12%. The move paves the way for units of Ambuja Cement and ACC in the state to resume operations.
The government has directed power units importing coal to operate at full capacity in the peak summer months to avoid power shortages. The diktat suggests compensation for higher costs buoys stocks of Gencos.
Hopes of China announcing a stimulus package in the month of March lifts steel prices to a 7-month high. Stocks of Indian steel makers gain on cue.
Hello and welcome to Halftime Report. I'm Sonia Shenoy. With me is Ekta Batra and Mangalam Malu. Well, not too much happening in the market. Expectedly, it's just a range-bound market with 18,000 proving to be a firm ceiling for the market, at least for now. We are gravitating in a very tight 100-point range at the moment. But there are a couple of pockets that are perhaps looking good. Banks are coming back after, seeing very weak performance over the last many days. On the downside, you have IT stocks that are just taking a bit of a beating, names like Wipro, etc., Apollo Hospitals, Bajaj Auto, also some of the big losers this afternoon. But by and large, you'd have to say power stocks are doing quite well, as we've elaborated over the last many hours. By and large, you'd have to say it's a very, very range-bound day of trade, no real triggers for the market. So I guess, it makes sense to focus on individual stocks.
Hi Sonia, hi Mangalam. Yes, absolutely. I'm just heaving a sigh of relief that there's no pharmaceutical stock which is moving today. So that's definitely a little bit of low news flow which is taking place, at least within that entire space. The Nifty, however, is hovering around that 20-day moving average. We're above those levels. Let's see whether we manage to sustain, and that would be a key support area to watch out for. But it is a lot about the capex infra-related stocks today. So all of that seems to be powering ahead. Metals, the L&Ts of the world, the Siemens of the world, all of that is on the upside. Fed minutes continue to be in focus because that will determine what the trajectory might possibly be for the Fed going forward. A lot of stocks, however, at fresh 52-week highs, which we will be discussing, the likes of Persistent, Shree Cement, Siemens, to name a few.
Yes, we do have a bunch of stocks which are all in focus. It's a bit of a tug of war between bulls and bears, and the lines are so narrow. We have 17,850 at the lower end and 17,950 to 18,000 at the upper end itself. Question is who gives in first? Meanwhile, the mid-cap index at an index level was underperforming for most part of the day, and now because the index, the Nifty itself has come a tad off highs, the mid-cap index appears to be outperforming again a tad. If you just take a look at the advanced decline lines, they're at an even keel, no real cues coming in. Maybe we start getting some cues tomorrow from the second half and day after, which would mean the expiry trade plays out. But currently, as we speak, AB Fashion is a stock which is uncharacteristically low right now, down by about 4.5%, volumes piling up. So it'll be interesting to see where that goes as well. So individual stocks in focus, but we've been harping about how power stocks are buzzing in today's trading session. So let's go straight to Vivek, who will tell us more and what has them powered ahead. Vivek.
Well, absolutely. So what's actually happened is that, the Ministry of Power has gone ahead and invoked Section 11 of the Electricity Act, which basically means that now they've gone ahead and given a mandate to power companies to import coal in case it is necessary, especially given the fact that they're anticipating a significantly higher demand in the coming months, especially given the fact that when you're talking about the summer season, the impact of the demand is something that causes a significant amount of requirement for coal supplies. So a similar move was taken last year, between May and December of 2022, and the key beneficiaries, of course, were Tata Power as well as Adani Power, given their power plants that they have at Mundra, where they actually go ahead and import coal from Indonesia. And now, talking about the impact of this particular move, Citi has come out with a note on the entire electrical utility pack. What they're saying that this particular move will benefit imported coal-based power plants, and the imported coal-based power plants currently are unable to pass on the full fuel cost pass-through, which which Section 11 allows. So plants currently operating at very low capacity, and especially what they're talking about is Tata Power's Mundra UMPP, where they say it will benefit significantly for the period under which Section 11 is in force. We spoke to other analysts as well. Analysts believe that this is quite positive as far as the entire power ecosystem is concerned, especially coal-fired power plants. Last time, when this particular development happened in the first quarter of FY23, the PLF, or the plant load factor for NTPC, improved from around 70% to a little over 80%. And merchant power plants too are likely to rise. So another beneficiary on anticipated higher demand is going to be IEX as well.
Okay, thanks a lot for that. Well, the other stock that is in focus this afternoon is Minda Corp. It's losing in trade today. It's down, I think, about 4% the last time I checked. Now, the management had a conference call yesterday, and it said in that conference call very categorically that this stake buy of 15.7% in Precall is just a financial investment. Now, they will continue to be just a minority shareholder in Precall with no special rights, and they will continue to explore all opportunities going ahead. They are quite bullish on the growth prospects in the instrument cluster space. But the reason why the stock is under pressure is because their investment will only be a financial investment. So what is the way forward, and why have they used, cash on their books to go ahead, or the QIP proceeds to just merely make a financial investment? In fact, Nirmal Bang put out a note where they said that the deal is pretty much EPS dilutive in the short to medium term. And by making this investment, what they've done is they've foregone the interest income. They could have rather deployed those QIP proceeds in a manner which would have yielded higher return ratios for the company. And from a capital allocation perspective, it's not the best decision, and it is a very aggressive call. In fact, Nirmal Bang has downgraded the stock to an accumulate from buy. So clearly, this investment and the fact that it's just a mere financial investment is not gone down too well with the street, and the stock is now down almost 4%. In fact, let's listen into what the management had to say in the conference call.
Minda Corporation has purchased 15.7% equity in Precall for a cumulative amount of 400 crores through on-market transactions on 17 February 2023. The shares of Precall are purchased solely for the investment of the surplus funds available with the company. Minda Corporation investment in Precall is through market purchases, constituting a minority stake, and this investment does not grant any special rights. Minda Corporation is and will be generating enough free cash flow from operations to fund our routine capex and organic growth. The company has well-positioned balance sheet. We have, after this investment, we'll have a debt to equity at about 0.3, and the debt to EBITDA will be around 1:1. The long-term debt as of today is about 150 crores. Short-term is to the tune of about 350.
Okay, just a financial investment as of now. That's the word coming in from Minda. We need to take a short break. On the other side, we will be focusing on a lot more stocks which are in the news today. Stay tuned. Welcome back. Well, it's definitely a quiet day, but there is some amount of stability which has come into the financials, so that's definitely positive. The Bank Nifty just about holding its head above the water with a gain of around 7 odd points, or maybe just about flattening out. So let's see whether it manages to remain flat or whether we are going to see that renewed pressure come through in terms of a lot of the financials. Just want to point out that within the broader markets, there are a lot of stocks which are gaining. So for example, Dishman came out with a good set of numbers a couple of days ago, which was closer towards the end of the earnings season. To put it into perspective, the stock has rallied around 18 odd % on a week-to-date basis, and it's up around 28% this year. So there's some amount of traction coming into Dishman. Just watch out for that particular counter. But let's move focus now. Adani Group cement companies ACC and Ambuja have restarted operations in Himachal Pradesh. This is after resolving freight issues with truckers. Nigel is here with more details on this.
Well, that's right. Good news coming in for ACC as well as Ambuja Cements. After nearly around 2 months odd, the operations have restarted in Himachal Pradesh. It was initially shut down in December 2022 because, in fact, there was a dispute with the truck operators out there on the back of freight rates. Now, Ambuja Cements as well as ACC, they wanted lower freight rates while the truck operators weren't moving. But now we understand that everything has been amicably resolved. The revised rates as well should come up for you on the screen, both on the 12-ton as well as on the 24-ton. The management says that this will basically reduce freight costs by close to around 10 to around 12% odd. And this is positive for ACC as well as Ambuja Cements because it constitutes nearly around 10% of their total volumes, which is good news, point number one. The second factor is these are EBITDA accretive units or profitable units. So it will be a bigger impact on the EBITDA front. In the interim, they would be moving some of that cement from other cement plants to the Himachal region. So this, in fact, will result in savings on that front as well. The bigger question is what happens to the industry? Now you have two large units that have got restarted. Will the recent price increases that have been pushed through, will they hold out? Well, in the next few days, we'll know on that front as well.
Okay, thanks a lot, Nigel, for that. Well, on to some corporate commentary now. Earlier, we spoke to Vimal Kejriwal, the MD and CEO of KEC International. The company has bagged orders worth over 3,000 crores across various businesses, and he was very optimistic about double-digit growth on both the top line as well as on order wins. So take a look at what he had to say.
As far as the next year numbers are concerned, we have been talking about a growth of around 15%. Both in revenue as well as in the order intake. Broadly, a large part of these orders are from the Jal Jeevan mission, So these are water pipeline orders. So these will be typically around 24 months or so. It also includes our first commercial venture, commercial building in West Bengal. That's roughly, I think, 15 months or so. And an oil and gas pipeline, which is again 15 or 18 months. So broadly, revenues will start accruing in from Q1 onwards. And margins, I think, typically, margins on these projects would be between 8 to 10%.
All right, so that's about KEC International. Stock mildly off highs right now. Syngene is, one of the stocks which is doing extremely well this afternoon at the high point of trade. We have Tata Power along with all the other power stocks moving well as well, extending its gains currently at the high point of trade, one of the bigger beneficiaries of the announcement that came by. But let's talk about the telecom industry now. Entry-level telecom tariffs have increased by over 340% in the last 3 years. Remember in December 2019, when a prepaid user paid as little as 35 rupees as the lowest tariff, now has to pay a minimum of 155 rupees. Rima joins in and explains why.
Thanks so much for that. So this follows the hike that Bharti Airtel took today in its entry-level tariffs in 2 circles. Now, India has 22 circles. Today, they hiked prices in 2 circles, Maharashtra and Kerala. And the price hike was from 99 rupees, which was earlier the cheapest plan, recharge, and now it's at 155. So with this, 19 out of the 22 circles have seen a tariff increase at the lowest end. The entry-level prepaid tariff charge has gone up. Now, here we just want to highlight what has happened over the last 3.5 years. Well, in December of 2019 and prior to that, the company had an entry-level plan of 35 rupees. That got discontinued and then it became 49 rupees. In July of 2021, it became 79 rupees. In December of 2021, it became 99 rupees. And now over the last 3 months, that has gone up to 155 rupees, which basically means from November, December of 2019 till today, 3.5 years, we've seen the entry-level prepaid tariff go up from 35 rupees to 155 rupees. And this is a massive jump of 340%. But in comparison, the tariffs for the higher priced plan have only gone up by 50%. And I'm only taking an example to illustrate the point that I'm making. But in December of 2019, broadly, it was a rough increase of 25%, which was followed by a 20% increase in December of 2021, which basically means 50% approximate increase seen in the higher tariff plan. So what explains this sharp difference, right? 340% at the entry level and 50% at the higher price level. The reason is that Reliance Jio, remember, is not present in 2G. So this is where Bharti has the advantage to go ahead without fearing losing its subscribers. Now, how do you interpret the latest tariff hike? Well, it's important. It's a step in the right direction. They're walking the talk, but not very material, because the number of subscribers who we estimate to be at the lowest end of this, recharge plan would only be about 15% of their overall base, but the revenue contribution would be a lot lower. Also, these subscribers at the lower end may not recharge every month. They may skip a month if they have some difficulties. There is a possibility that they will switch switch to a competitor like Vodafone Idea because they have not gone ahead and increased the tariff. So on the whole, brokerages say the benefit is going to be less than 2%. The bigger trigger from a tariff increase point of view for the telecom industry will be a 4G tariff increase, which could be more broad-based. So that's something that the street will be watching. Back to you.
All right, Rima, thanks a lot for that. There was some analysis which a lot of the consumer companies did, and they said that the biggest impact of a telecom rise at the lower level is that on low-priced consumption. Because if, like Rima said, it is increased by 100 rupees per month for a household of 4 people, if they have 2 phones, then their monthly expenditure increases by 200 rupees. And people choose investing in their phones because they get a lot of data, entertainment, etc. over buying FMCG products. So if people are spending 200 more rupees on phones or more rupees on phones, will there be a negative correlation for the low unit packs of FMCG products? Is something we have to see.
I think it will definitely be a positive for eye drops. Just asking for trouble there, but nonetheless.
Okay, well, we'll do one thing. Let's take a quick break on that note. On the other side of the break, Sachidanand Uttekar of Trade Bulls will be joining in with some trading strategies. Do stay tuned in.
Welcome back. You're watching us here on Halftime Report. It is halfway through the trading session. Also important to get in what the markets are doing in terms of an F&O space, primarily because we do have the expiry playing out in a day and a half from now. We've given up all the gains. In fact, there was some recovery from the lows, and currently we're back to the low point of trade. And it was led, the recovery itself was led by the Nifty Bank. However, on the way down as well, it is the Nifty Bank which is leading the Nifty lower, currently around that 17,836 mark, which is pretty much close to the 20-day moving average of 17,839. What's taking place right now is that a fair amount of put writing action was visible at 17,900 as well as 17,800. So if you just take a look at the 17,900 put, almost 30 lakh shares added for in open interest, and the 17,800 put as well. 95 rupees in terms of premium out there, telling you 17,800 as well as 17,750 is being sought as an important support. And where we are right now, 17,839 is a crucial mark, primarily because it is the 20-day moving average. On the way up, however, levels upwards of 17,900 facing a stiff resistance. That's why call writers are extremely active as well. So if one is writing both the 17,900 call and put, they're looking for a range of 17,800 to around 18,000 on the indices for expiry. Resistance, stiff resistance near 17,950 to 18,000. That's where the option action is pretty active. In fact, option action is the most. Also watch out for the Nifty Bank, because while it recovered from the lows, it is still way below its 20-day moving average. If it does go there, it is likely to face some resistance, just the way the Nifty itself is facing resistance. So where does it all leave the charts? We have Sachidanand Uttekar of Trade Bulls joining in. Sachidanand, we do have a bunch of cues coming in terms of expiry related moves. What do the charts suggest?
Good afternoon, Mangalam. Mangalam, I think the broad structure still remains negative. We have already seen a smart pullback in the morning session, but if you look at the entire data set, it was exhibiting that 17,960 could remain as a very strong hurdle during the day. So again, we have seen that the Nifty is drifting lower, and if you look at the daily setup, we clearly have a 5 and 20 crossover on the negative side. We also had the RSI falling below the 50 line yesterday. So these are the triggers indicating that there is further weakness which is yet to be witnessed, and that's why we are recommending building fresh short positions when it comes to Nifty and Bank Nifty as well. The fresh trade setup still stays on the lower side. We are expecting the expiry to shape up somewhere close to 17,700, 17,750 kind of a zone. So we are still preferring building shorts. The stop loss should be placed at 17,960 from here on for the Nifty, and we're expecting a drift towards 17,750 eventually when we see the expiry day trade shaping up. When it comes to Bank Nifty, the 40,500 support was respected well, but eventually we see this particular support also getting breached. We're expecting the Bank Nifty to drift towards its 200-day exponential moving average, which is placed at around 40,000. The stop loss should be placed at around 41,040 on a closing basis, and even here I think fresh shorts could be deployed.
Okay. That's interesting. You're expecting a move down towards 40,000 for the bank nifty. Stock-wise, what would you probably have a call on or a strategy on within the bank nifty in terms of individual constituents?
Well, I think the entire pocket of PSU banks have been on the negative side. We already participated with trades on the negative side with SBI, but right now I think yesterday we saw a fresh breakdown in Canara Bank. If you look at the entire structure, it looks like a classic triangular formation which has witnessed a breakdown. So we are expecting a follow-through movement there. The March levels indicate that this particular move can extend towards 276, and that's why we have recommended building short positions when it comes to Canara Bank. The stop loss should be placed at around 290. The other stock which is on our radar, which we have also recommended to our clients, is SBI Life. Clearly, if you look at the structure, it is in a classic low top, low bottom sequence. We've already seen a breakdown from a bearish pennant formation. The pattern is indicating a price target towards 1100. So even here, we are recommending building fresh short positions. The stop loss from a trading perspective should be placed at 1168, and the pattern target is placed at around 1100.
Okay, all right. Thanks a lot for joining in, and have a great day. So that's Trade Bulls talking about all the stocks in focus. Let's slip into a short break. When we come back, we'll get you an exclusive chat with the management of JK Tyres on demand trends. Stay tuned. Welcome back to Halftime Report. Now, JK Tyres is a company on our radar. It's seeing robust demand for bus, trucks and passenger vehicle radials. However, two-wheeler and three-wheeler demand continues to be subdued. The company also hopes to continue a strong performance in Q4 after seeing good sales in January. Our correspondent Danish Anand exclusively caught up with Anuj Kathuria, who's the president of JK Tyres. He started off by asking him about the two new tyre launches and how much the market share is that the company has at the moment, how much they plan to capture with the help of these new additions. Listen in.
These new two SKUs that we have launched today are part of the Ranger series. As you know that the Ranger series has a lot of good high-selling SKUs. What these two tires will do is it will help us complete the range, complete the offering. We have seen that certain customers are looking for tires which are, can go into any kind of terrain. So the extreme all-terrain tires gives them that option. And there are some very specific features that are made into these SKUs. So I expect that this will be very well accepted by our customers. The second one is the HPE Ranger, again from the Ranger series. So this has been specifically made for the electric vehicles. And this again comes with a lot of features. A couple of them, one is that the noise levels are much lower. And as you know that on EVs, the coefficient of rolling resistance has to be kept at a lower level. So these tires, the HPE, is specifically designed for that, and I'm sure it will be catering to the needs of the EV vehicles, and we expect both of these SKUs to be doing well. In fact, we had launched them last month in Bombay and then again in Chennai. So already these have been, we have started giving these tires to our customers in the market, and they are being well accepted.
So the company had a great Q3 in terms of the total revenue. So as far as your expectations and outlook is concerned, what are your expectations regarding Q4, and where are you planning to finish this current financial year?
Yeah, Q3 was a good quarter for us, and we had quite decent results. So thank you for that. As we all know that quarter 4 is generally the best quarter for the industry, for the auto industry. So we expect that the OE demand also should be good, and followed by equally good demand coming in from the replacement market. So as of now, we have seen the month of January, which was a good month, and we expect that further also the remaining part of the quarter we should be doing well. So very difficult to put a number to it, but I'm sure that quarter 4 would be equally good.
So as far as the demand is concerned, which are those segments in which you're seeing a little bit weakness in demand, and are there any segments within your business which are performing very well beyond your expectations?
Overall, I think so. The demand for the truck and bus radial is quite robust. Passenger cars are also doing well. Yeah, the 2-3-wheeler, especially the 2-wheeler demand is a little subdued. But I think so with the good monsoon that we had and with a good harvest, the rural economy should be doing well. And with that, I see that there would be some revival in the demand coming in from the 2-3-wheelers also. But as of now, I think so the passenger car and the truck and bus radial are doing fine.
Sir, like you have launched a special tie-up which is made for EV. So as far as your future plans are concerned, do you plan to increase production of this special tie-up for electric vehicles? And 5 years down the line, how much of electric vehicle tire special manufacturing can we expect from the company?
See, these will be purely led by the demand that comes in from the market. So we are getting our products ready. So as you see that we have a few products which are already being positioned in the market, and we would be launching a few more. And this is a continuous process. As far as our manufacturing facilities are concerned, we have the flexibility, so we can manufacture from our existing plants these tires as well. So it will purely depend on what is the demand and the penetration of the EV vehicles itself. As we all know that it has started, but it is still a very small percentage. But we expect that in the near future, the demand would pick up, and we'll have to calibrate going forward as per the pull from the market.
So very lastly, you have mentioned the demand, you have mentioned your future plans, but most importantly, what is the update on the raw material front right now? What is your outlook on rubber prices? And as far as margins are concerned, what is your expectation for margins?
Yeah, there's a lot of discussion on the raw material. But yeah, we are seeing a little bit of softening and then stability. So as of now, we don't expect the prices to go up further. But, you know, when the prices were going up and it went up for almost 7 quarters in a row, which was unprecedented for the industry. So that impact of that has not been, we have not been able to pass it on to the market completely. So we are in the process. So on one side, there is a little bit of softening. On the other side, we had been able to pass on some. So we will have to see where the equilibrium gets established. But as of now, the good news is that further increases are not being seen, at least in the immediate future.
And the margins?
Margins, as we said, we reported a Q3 result, which was a high single-digit EBITDA, and it was better than the previous quarters. So we expect that with a little bit of softening on the raw material, margins should improve going forward.
All right, that was the management of JK Tyre. Just keep an eye out on the markets before we take that short break, because now the Nifty has moved to the low point of trade, led lower further by the Nifty Bank, which is currently down by almost 100 odd points. Why is the Nifty Bank lower? We have all its big components, none of them doing too well right now. HDFC Bank has come firmly off the high point of trade, almost 1.5% shaved, but that's the only one which is mildly in the green, along with ICICI Bank. SBI has dipped further, currently at the low point of trade for that one as well, as has Indices Bank, which is lower by about 1.2%. So it is the Nifty Bank which is once again pressurizing the Nifty. And alongside that, we do have a lot of other stocks as well which are lower. We have Bajaj Auto, which has slipped to the low point of trade, and Apollo Hospitals has been underperforming, down 2% as we speak. So we will monitor the situation, but for now we'll take a short break, not only on the show but also from equities. On the other side, we'll have Manisha Gupta joining in with RK Janamani of the Indian Met Department to discuss the impact of early heat waves on crops.
Welcome back, and joining us now from IMD's Mr. RK Janamani. Sir, thank you so much for joining us here on CNBC-TV18. And clearly, we've been talking in studios as well on how warm it suddenly has gotten. First of all, an understanding from you on what are the kind of temperatures that we are dealing with pan-India right now?
Yeah, mainly it is over, I must tell, South Rajasthan and almost Gujarat and Konkan. So almost last 7 to 8 days, the temperature, 5 to 11 degree above normal, and Bhuj reached around 40 plus, around something like Shivaratri day, that is maybe 18. And that at the same time we had another higher temperature over mainly Himachal. When we have a Shimla, the normal is something 12, and it reached to 23rd, 23 degree, something like that on Sunday also. So that Himachal, Uttarakhand, Jammu Kashmir, and that again Punjab, Haryana also coming into the warmer temperature.
Yeah.
So whole northwest, including Rajasthan and then West UP also is adding up yesterday. West Madhya Pradesh also has been higher than normal. So all these belts are higher than normal, 5 to 8 degree. But positive thing is that particularly the Bombay and some part of the Konkan, the temperature has been a marginal fall in last 2 days. And Gujarat also has not raised further. It has in fact fall by 2 degree.
Okay.
But all these are temporary actually, because we don't get any major weather system for next 10 days over all these belts except the western disturbance around 27 night giving some snow over in Himachal and Jammu Kashmir, Uttarakhand. So plains area, all these Gujarat, Northwest India, no rainfall. So that is a concern. But as you know that it is early part or end part of the winter and early part of the almost, in March we start officially summer.
Right.
So all things we have to wait actually, because it all depends on the wind and local, features also.
So would you?
Main concern is the impact on the agriculture, because as we know that it is in full this is flowering stage, whether it is Madhya Pradesh, whether it is Punjab, Haryana, wheat belt, and even a large part of India, it has a very big acreage and crops. So we have given yesterday first time the special advisory because the temperature high, so we don't want to keep this information. We want to flash it, and we are monitoring very, very seriously day to day. Yeah.
Absolutely. Yeah. Sir, we also have seen Delhi record the third hottest February since 1969. I mean, this is a data that you guys put out yesterday. Would you say that the winters are now formally over, done with?
Yeah, definitely. I don't think we will get any further fall in the... now the discussion of minimum temperature almost over. Now we are shifting to mainly the day temperature, because that has been... of course, minimum is also +3, +4 degree. So like Delhi has reached up to, 13 or 14 degree, and then maximum 33.6 is... So both the maximum minimum are +7, 5 or +9 like maximum. So that's the warm temperature we are dealing. But as I told you that we are giving the advisory, we are mainly concerned, as you know, that March and February second half temperature mainly concern is the agriculture. Right. I don't think it has any kind of impact on livestock or anything on the, because as long as the temperature remain below 40 or something like that. So that we are mainly strictly following it.
You said it is end of winters and then perhaps an early beginning of summers as well. And with the kind of temperatures that we already are looking at in the month of Feb, and are we preparing ourselves then for harsher summers going forward?
Actually, all these are very early stage. What I told actually that we don't get, the, negative anomaly of minimum temperature. So it's very difficult to tell actually, because there are a lot of other factors, comes into the picture, wind condition and location of the anticyclone, which is over Gujarat, giving, little higher wind and giving, high temperature. But definitely, if you ask me, I will not be, in a very strictly tell this will happen, that will happen until unless I have information. But we are monitoring the situation.
Sure.
That I want to say.
Mr. Janamani, I just wanted to know from you that with the temperatures rising so early in the year, is there a possibility of it impacting monsoons as well? Maybe...
No. Actually, this is, I don't think, the people who have a very commendable knowledge, because monsoon is a very, very completely different, I don't think it is attached to any features of March or February actually. So it all depends, that's why we are telling in April and then we update continuously.
So you don't think El Nino is a concern right now?
I don't think, because until unless we look at our official forecast, because El Nino one of the parameters, but you have several other parameters. So we have to wait till our monsoon forecast come out in April, something like that. But right at the time, we are mainly, focusing on the temperature, because that has a high, impact on other various sector actually. So we are, but one thing negative is that there is no chance to get a rain over plains of India next 7 to 10 days. So that is indirectly showing we are looking for winds or something circulation feature. So we will definitely come out with a bulletin, another bulletin also by again reviewing the situation actually.
Okay.
But temperature are higher than the normal. That is the only issue. Yeah.
Okay, all right. So we're going to leave it on that note. Well, Delhi recorded 33.6 degrees.
I was in Delhi that time, so I can tell you it was extremely hot.
Third highest temperature in February since over 50
Out on a record
years.
since 1969.
My God, I just hope that that was the end of the record.
You know, the worst
But
part is that
nonetheless.
he says that he doesn't see temperatures falling from here. So
He says the
And
winter
he
is
said it
over,
won't
but if the
impact
summers
the
have already
monsoon.
begun,
Yeah.
and it's not even March, I mean, we still have March, April, May, June. Before we see monsoons, I don't know. Yeah, as he said, they will be issuing more advisories going
But
forward.
definitely want to hear from an air conditioner company
Oh,
to see
yes.
what they would be selling in terms of volumes. But nonetheless, thanks Manisha for joining in and taking us through that conversation. Need to take a short break. More on stocks once we're back. Stay tuned.